All right. Good afternoon, everyone. Before we start the presentation, we would like to thank our sponsors, Bento Green Oak, for their support, our program managers, Ratik and Wendy, our mentors, Robert and Preet, and finally, the judges for being here today. Welcome to 2708 39th Avenue, Long Island City, Queens. Judges, we're looking for a limited partner to invest $3.7 million into our value add deal in exchange for 75% of the equity. Our property is situated at 2708 39th Avenue, Long Island City, Queens, with a listing price of $10.9 million and a mix of 40 units. Currently, the subject property holds an NOI of $525K, but we believe with our creative value add plan, we can push this to $639,000, creating a 1.62 times equity multiple for our investors in the span of 3 to 5 years.
As we speak, New York City is becoming an investment hotspot once again. In the past few months, COVID-19 restrictions have been lifted. The rental market statistics have reached all-time highs, and foot and subway traffic has returned, bringing back the city that never sleeps. Our team at BGO are making our own stake in this narrative, introducing you to our property, The Forge. We want you to imagine the process of shaping an object into something new. This property represents our plan to forge ahead a new experience for our tenants, an experience that is solidified like metal, being hammered down on an empty slate of opportunity.
My name is Brittany Balkasoon, and along with me are the wonderful Manja Kaur, Nicola Coley, and Michael Sorensen, and we will show you why you should invest in The Forge. To expand on why we think this is such a good investment, we're going to break it down into 4 parts. We will take you around our market and walk you through our property, and of course, show you how we're going to add value to The Forge and how we're going to finance it. Manja will start us off with the market.
Thank you, Brittany. Queens is the most ethnically diverse area in the world, where you can get bacon, egg, and cheese in the morning and sushi in the evenings. Renters occupy more than half of the market and have an average income of $73K. Queens may have a negative population growth rate, but as you can see, Long Island City has a positive growth rate driven by companies such as Amazon, BJ's, and Target, to name a few, who are all moving into LIC. The renters in LIC primarily work in the finance and IT sector and earn an average income of $100K. Recently, Crystal Moore and Nasima Dillon both moved to Long Island City, where they bunked in together as previous high school friends. Being that both women are relatively young, with college debt still needing to be paid off, it's important that they cut costs wherever possible, but be around an area where they can have fun. With transportation being so accessible, it's easy for Crystal and Nasima to plan any trip, whether they want to take the 7 to go to the Bronx or hop on an E to spend the night in the city. The only thing these two have to worry about is where to go and not how to get there. In fact, let's take an adventure.
It's finally the weekend. After a long shift, Crystal and Nasima take over the city. They first head to the bank to withdraw money as Nasima begins scrolling through Google for fun places to visit. As they feel the fresh breeze from the East River, they just know it's going to be a good day. With new promotions and thoughts of vacation, they make a stop at Murray Park to catch up. After a quick chat, they make their way over to the lovely Pepsi Cola sign for the beautiful nighttime view. Suddenly, they smelled a hot dog from a walking stranger and realized they needed a place to eat. Nasima found the House of Thai on TikTok, which raved about their famous pad thai. They immediately called an Uber and made it there faster than they expected. The food definitely lived up to the praise, but the night was still young, so Crystal and Nasima decided to get some margaritas with some new friends at the Shannon Pot. After a night of memories, they can finally say moving to Long Island City was the best idea. Now, we'd like to introduce you to The Forge. The best way you can see this property is through a beautiful 3D model. With realistic views and realistic people, you can experience The Forge before you even get there. In the heart of Queens, The Forge includes a 5-story multifamily acquisition built in 1929. This building has a total square footage of 25,000 and sits on a 7,500 square foot lot. Here, you can pick up your packages at our package receiving office while you wait for your clothes to dry in our laundry room. And when you think about that 2 a.m. bike ride, just know your bike will be safe and sound for work in the morning. Our prospective tenants have changing values. One day you need a small space, and the next day you want to start a family. We are here for the big and the small changes. The Forge's unit mix has a variety of options from 1-bedrooms and small 1-bedrooms that typically rent for around $1,600 and 2-bedroom apartments that are close to $1,900. This compares to the rents in surrounding buildings, which we can see here, where 1-bedroom apartments go for around $1,800 to $2,100 and 2-bedroom apartments go for around $2,300. We also made sure these buildings have similar amenities compared to our property, which left us to assume that the only thing missing was a proper renovation. Now, Brittany will introduce us to how we're going to add value in order to push these rents.
As you've heard from our members of BGO, this property has notable upside potential. Our value add plan makes it clear why you should invest into this property. From the rent comps, we saw our free market rents were underperforming. Utilizing our market research of nearby properties, we found renovating the kitchen and bathrooms for our 32 free market units will help get these rents back to market. We budgeted $22,000 per unit to match the conditions of competing apartments currently on the market. We believe after modernizing the kitchen by installing new stainless steel appliances, refreshing cabinets, and adding a new coat of paint, tenants will not second guess a night in to cook. This beautiful kitchen now features stainless steel appliances and new cabinets, making it easy for Crystal to add her creative flair to get the perfect look. In the bathrooms, we had quite a bit of work to do. As you can see, we will be adding flair to the bathroom by installing white ceramic tiles to the walls and the bathtub base. We will also be replacing fixtures and cabinets. Our newly renovated bathroom with new cabinets and tiles is the best fit for Nasima to practice for her new promotion at work. Taking a look at our timeline, we plan to have these renovations completed within a year. The first step is to build out our team and hire a real estate broker, a contractor, and provide a 30 days notice to all the free market units, which are all expiring this year. We will be renovating 8 units every 3 months for 4 phases. By organizing our timeline in these stages, we will stagger our lease schedule, mitigating the potential risk of having all our units expire at the same time. During renovations, we will gather our marketing materials, begin leasing, and have our units filled by the end of each quarter. Each phase of these apartment renovations will cost $176,000. To reiterate, by the end of the year, the leases for our 32 free market units will expire and open a significant opportunity to raise rents. After the $704,000 in renovations, we expect an average price increase of 18% per square foot and invested capital yield of 21%.
During our renovations, we want to stay in touch with our prospective tenants. You can find our units easily with a simple Google search. By hiring a real estate broker, we will be advertising on sites like StreetEasy, Zillow, Trulia, and other brokerage sites. We will also have access to our broker's exclusive network of renters, making it easier to fill our units. Currently, the property is being managed by a small firm that isn't professionally managing the property. Instead, we are signing with a new company, one with a larger back office to assist us in managing our renovations in year 1. They will lead us in implementing non-financial factors, bringing growth opportunities through ESG. As you can see on the left, we have a contract ready to sign, and we're excited for you to forge this new relationship with us. Hiring this company will add value to our tenants' experience while living at the property. Our management company offers an online portal where tenants can pay online, request maintenance and emergency repairs, as well as complete electronic lease signing. This service offers paperless operations of our building, which is a contribution to our environmental impact. Hiring a management company will lead to improved efficiency, cash flow management, and a better managed property. When sitting down with our property manager, we were advised of the New York City requirement for landlords to provide janitorial services in buildings with 9 or more units. As the building currently does not have a super on premises, they will assist us in contracting one. We will be providing our super with housing through apartment 5B, one of our rent stabilized units. We will also retain our current payroll expenses of $9,000 for a combined annual compensation of $35,000. In order to optimize our energy efficiency and fulfill our environmental impact commitment, we decided to install a new boiler at the cost of $100,000, which will yield a 15% cost savings year over year commencing year 2. It will additionally raise the value of our property at sell date by $400,000. We believe this will aid us in selling the building, as the new owner will benefit from this new fuel efficiency. In addition to our renovations and new boiler, we considered ways to optimize the use of our rooftop. We spoke with several developers in the industry, such as Bernard Warren from Webb & Booker and Reed Crack from Asana Partners. We concluded that in order to provide this amenity, we would incur significant costs associated with ensuring the structural integrity of the rooftop common area. Additionally, we would need to provide ADA access to be in compliance with laws protecting rights of Americans with disabilities. This would require the installation of an elevator, as the building is currently a 5-story walk-up. Finally, the installation of a rooftop would require a new and costly insurance policy due to increased liability risk and maintenance costs. All of these factors lead to an unrealistic timeline of returns. Instead, at the advice of our property manager, we will be partnering with AT&T to secure a satellite lease for $2,000 a month, which will generate $24K a year in revenue. Our property will likely qualify as there are no obstructive trees and is one of the highest buildings on the block. Our team was motivated by AT&T's exclusive partnership with FirstNet, which provides nationwide coverage to public safety services and first responders. The satellite lease contributes to our social impact in acquiring this building.
With a new plan for our building, we can now discuss the financials behind it. Through our sales comp approach, we multiplied the average market price per square foot by the rentable square foot, and we came to a valuation of $12.43 million. Through our income approach, we used the average market cap rate and our current NOI to come up with a valuation of $11 million. Regardless, both methods shows that the property's current listing of $10.9 million is well below what we think it's worth. In order to finance this acquisition value add, we received a loan quote from Bank of America. It is a floating rate loan that includes the acquisition and construction costs. Its terms are that it holds a 4% interest, 60% LTV ratio, and a 2-year term. The principal will come out to be $7 million with an interest of $282K. After our value-add renovations are completed, our property value in year 2 increases to $13.3 million. During this year, we're going to refinance into a permanent loan for our acquisition loan. This leaves us with a free cash flow of $1.2 million, which we will then redistribute to our investors. The refinance also leaves the property with a healthy debt service, with the DSCR being 1.31 that increases over time.
As you can see, our renovations will yield a compound annual growth rate of 4.60% in effective gross income, a 2.35% in operating expenses, and a 5.57% in our NOI. Once we take the total of all our costs, including acquisition, renovations, closing costs, and origination fees, we see our total ends up being $12 million. We plan on financing the 60% with debt and paying with the 40% with our own and investors' equity. We plan to hold this investment for about 3 to 5 years in order to generate the highest return. By year 4, we expect an unlevered IRR of 8.66% and a levered IRR of 14.35%, bringing us to an unlevered equity multiple of 1.37 and a levered 1.62 times equity multiple.
Our team has identified 3 risks for this investment. 32 apartments will no longer have an effective lease by the end of the year. We will take this opportunity to complete renovations to raise our potential gross income and stagger lease start dates. While we renovate our apartments, we can see a decrease in our year 1 annual rental income because of 32 vacant apartments. To mitigate this, we will move our phase 2 tenants into our phase 1 renovated apartments to increase turnover and keep our loyal tenants. Finally, COVID-19 has taken a toll on the rental market, making it more competitive. But we believe with our apartment renovations, amenities, and the many benefits of hiring a management company, tenants will not hesitate in making our property a place to call home.
Due to our unique value add, the prime market location, and an increase in our potential gross income, this property is an optimistic opportunity to invest in. With this value add being done by the right team, our team, investors can expect a 1.62 times equity return on their investment in 3 to 5 years. Our team is even prepared to invest 25% of the equity needed to buy the property. Now, it's your turn to create a story that you won't forget, to rewrite the story that 2708 39th Avenue is known for. So whatever story you decide to tell, we hope 2708 39th Avenue, Long Island City, Queens will be the start of it. Thank you for your time, and we would now like to open up the floor for questions.
Team Bento Green Oak, that was outstanding. I mean, just wonderful storytelling, detail, research. I mean, just looking at the judges' smiles along the way was pretty fun. Why don't we kick it off with questions from Richard Mantacaria?
Wow, Great job, guys. That's first off. This is a Marcus and Millichap listing. So I would like you to just hand this presentation right over to our guys, because I just looked at our system and it still hasn't sold, but I think they had your presentation might sell quicker. So nice work. Quick question. So did you guys look into the cost of, I like the idea, by the way, of transforming the roof into revenue versus a straight up amenity for the tenants, but what's the cost of installation on the satellite and with AT&T, and how did you account for that in your analysis?
Phenomenal question, Richard. So we spoke with our property manager, and our property manager also manages a 45-unit multifamily. If you could go to slide 33, Ratik, it's our satellite rental. So on slide 33, we talk about the stages that are involved in this process. We met with a broker who's actually involved in site acquisitions, and they partner with AT&T. And they said there's actually no installation costs, and that AT&T absorbs that cost in order to extend service and provide a better experience to people that use AT&T. The fringe benefit of that is that they have a sponsorship with FirstNet, which provides services to first responders for free at cost involved in that satellite rental.
And just to add on, thank you, Michael. We've accounted for this in our other income in terms of the property, and therefore we're pretty confident that this value add will increase our returns over time.
That's great. Just a quick follow-up question, and I was curious if you looked into the impact as to how a financier would look at this when you go to refinance. That income is different than rental income from a tenant. So how does a bank look at the income from this rental stream versus that rental stream when you go to finance it, if you looked at that?
Yeah, absolutely. Great question, Richard. I actually spoke to the site acquisitions person directly on the phone, and he said that they don't consider the satellite rental income because it's separate from the operations of the building. So they only consider the leasing and the rental income, but it's a great question. We did our research.
You guys are on it.
Outstanding. All right, Alicia, David, Hillary, any follow-up questions or additional questions?
I guess, go ahead, Alicia.
Okay. Well, first of all, I completely agree with Richard. Great job. Loved the storytelling. The presentation was beautiful. Really thought of everything. Supplier diversity is extremely important to Related and the industry. And you spoke a lot about the positive environmental impact, and you addressed the ADA. But I was wondering if you considered a minority or women-owned business for the contractor for your renovations. If that was a thought.
Yeah, absolutely. So we're still sourcing a contractor for renovations. We got one initial quote. I'd love to share that cost with you. So if you could go to slide 51, Ritzy, it shows our renovation cost breakdown. So in this renovation cost breakdown, again, we did consult only with one contractor. We'd love to source others, but the breakdown shows a $7,000 cost in total for the kitchen and a $5,000 cost for the bathroom. Separate from that is the labor, which is a total of $10K. I'd love to also show you the business plan breakdown to show you an overview of the entire value add plan. That's the slide next. Awesome. So looking at the market, we also identified that the majority of apartments in Long Island City are no fee. So what that means is that the owner of the property pays a fee to the broker, and that the tenant, that renter, does not have to pay a fee. So this is a value add to the tenants renting our unit because they will not have to make 3 payments of the monthly rent. They'd only have to make 2. So we built in that payment, and we built that into our financial model, and we still ensure really good returns for our investors.
Great, thanks.
All right, Hillary, you had a question?
Yeah, so great. I mean, the transitions were phenomenal between each of you. You can tell you work really well together as a team. My question was around, and I don't know if I understood this correctly, but once you do the value add, were you saying you're going to move an existing resident into the value add unit? Did I hear that correctly? And then how do you think you're going to get the rent bumps on value add? Or are those residents going to pay the increased rents on the value add units?
Great question, Hillary. Give me one moment. I'm going to direct you to a slide. We're going to go to slide 65, our rent roll before acquisition. So on this slide, we show our rent roll with all of our units. We have 32 free market units that we're going to be renovating. Currently, we have 2 vacant units. So we broke up our value add in 4 stages, where we renovate 8 apartments at a time to stagger lease renewal dates and also to provide a better experience for tenants, so we don't have 32 apartments being renovated at the same time. So those 8 initial tenants, we have the opportunity for those to move into these vacant units while there's renovations being created. Then once these 8 units are renovated, we're offering those future 8 tenants for the next phase the opportunity to move into these apartments that were just newly renovated, but there's a slight bump in the rents. So if they'd like to stay, we'd love to have them, but there is going to be a higher rent because we're trying to match the market conditions. So they're going to have a newer kitchen, a newer bathroom, and things like that. We will be giving them notice. And if tenants decide to kind of take a little bit longer in the decision process, we built that into our pessimistic scenario where we added an additional month for the renovation periods and we still yield a good IRR.
Makes sense. All right. Well, thank you. Good answer.
Outstanding. Dave, you have something or?
Yeah, just real quick, Cedric. First, echo my fellow judges. The presentation is was phenomenal, just unbelievable. I'm a office leasing marketer at heart, and just so impressed by the presentation and the communication around it. Related question, sort of follow up question to Hillary's. Can you just remind me? I know you had that comp sheet early on in your presentation. How do your post-renovation rents compare to your competition?
Beautiful question, Richard. Apologies, not Richard, David. If you could go to slide 45, I'd love to give you a deep dive since I know you're into leasing. So we're going to take a look at slide 45 here. We're looking at a mile radius of our property, and we looked at 1 bedroom, small 1 bedrooms, and 2 bedrooms. So they're all within a close proximity. Now let's go to the next slide, Ratik. This is one of our 1 bedroom comparables. If you look on the right, you're going to see photos of the kitchen and the bathroom where we're mimicking the style. We're putting new cabinets, we're putting stainless steel appliances, and we're adding tiles and a backsplash. If you look on the left-hand side, we actually ran a comparable report through StreetEasy in a 60-day period, and we looked at apartments currently on the market. The left-hand side, you could see what a renter would see as they go through the apartment's pictures. These buildings also have the same amenities. So we're not showing you new development apartments and saying, oh, ours are very undervalued. We're looking at apartments that are our competitors in our price range for the renters that we're targeting. If you go to the next slide, you could look at our 2 bedroom. So our 2 bedroom is at $2,350, the same price we're marketing our apartment for. We're looking at similar renovations. We're putting in new cabinets. We're putting in new stainless steel appliances, upgrading the bathroom, and we go through, and it's the same situation. We have a handful of competitors, very small percentage of the total apartments currently rented. And we're going to do similar renovations. So really, we're looking to match our competitors and compete with them.
That's great. Really helpful. Thank you. Yeah.
Outstanding.
No worries.
Great job,
Cedric,
team.
we would love to end with something real quick, if you permit.
How could I resist? Please.
Judges, we hope we left all of your questions answered. We would like to forge a relationship with you as our newest investor. In the chat, you can find our newest investment memo that details this beautiful investment property. Our team would love to meet with you to discuss our various investment opportunities that give you